The Fed announced its latest rate hike last week, and as expected, it raised the rate by 25 basis points. The S&P 500 didn't take the rate hike negatively until Yellen contradicted Jay Powell on guaranteeing all depositors money. And on that confusion, the S&P 500 sold off from Yellen's statement. There were a couple things that Jay Powell mentioned in his press conference that also contributed to the sell-off as well. One is his answer to a question regarding to the market pricing in a rate cut for 2023. Powell answered with a resounding no, and he said a rate cut in 2023 is not in the base case. But he did give a possibility that a pause could be coming soon. So what does all these mixed messages from Powell and Yellen mean for the market? In this video, we'll look at the market sentiment, market internal as the price action of the S&P 500 and the indexes, the US dollar, bond yield, oil, gold, and silver, and the 11th sector in the S&P 500, and see where the market is headed. Looking at this weekly chart of the S&P 500, as you can see, the S&P 500 last week had a $130 range for the week, and also it closed with a gain of 54 points, or 1.39%. It did break this one-time framing down and starting a one-time framing up on a weekly basis, and it did close above this 40-week moving average, but it's still under this 10-week moving average. And right now, it is still inside, basically trading sideways inside of this 10-month range. And look at the weekly performance for the indexes. As you can see, the Nasdaq 100 is still the top performer along with the Nasdaq Composite. And also the large cap tech stock helped boost the S&P 500 as well. And you see that the Dow Jones Industrial was also quite well based on a boost from Apple and Microsoft. Now, for the year to date, the Nasdaq 100 and the Nasdaq Composite are the top performer, with the Nasdaq 100 still holding a gain of 16.7% for the year. And the worst the worst performer is the Dow Jones Industrial and also the New York Stock Exchange Composite. As you can see right now, the Russell 2000 is also turned negative for the year. If you find the content in this video to be informative and useful, be sure to smash the thumbs up to give it a like and help promote this video on YouTube. And if you are new to this channel and like to continue to watch these videos from me, then subscribe. Now looking at the sentiment chart here, we see that the VIX on Friday closed at 21.74. And throughout the week, it was still inside of this 20-30 zone. So the market participant was still quite fearful, although they are not panicking if like it was down up at the 40 level. Neither are they complacent down at the 15-16 level. So right now they're inside of this 20-30 zone that tells us that the market participants are still fearful. And also the put call ratio, we see the put call ratio just a little bit above 1. So they are buying put more than buying call. So definitely it is risk off, and the market participants are getting a little bit more bearish. And looking at the internal, we see the up-down volume ratio on Friday. It was 1.6 to 1 in favor of the up volume. I mean, the advanced decline was 727 more advancing issue than declining issue. Notice the first couple of days of the week, they were quite a little bit of a broad market advance. And then in the middle of the week, the 2 day, Wednesday and Thursday, was a little bit of a broad market decline. Likewise for the up-down volume ratio. So it was kind of a little bit of a mixed bag week for the S&P 500 and the New York Stock Exchange. The new high, new low, there were still more new low than new high in the New York Stock Exchange. On Friday, there were 303 more new 52-week low than 52-week high. And looking at the cumulative AD line, we see that the cumulative AD line is still kind of hovering down here, showing a slight negative divergence with the S&P 500. We see the S&P 500 is still trending up, while the cumulative AD line is still showing a little bit of a lower low here, and we still need to get this negative divergence to get resolved. So the expectation is for the S&P 500 to come down and dip below this pivot low. And looking at the Nasdaq market also showed a little bit of a mixed bag, similarly to the New York Stock Exchange last week. On Friday, it closed with a 1.1 up-down volume ratio with a in favor of the up volume. But again, you notice that on Tuesday it was quite a strong buying pressure, and then on Wednesday it was quite a strong selling pressure. And similarly for the advanced decline, the daily advanced decline on Tuesday it was a broad market advance, and then on Wednesday a broad market decline. And then on Friday, actually there were 697 more advancing issues than declining issues. And in the 52-week new high versus new low for the Nasdaq market, it has continued to expand with more stock making new 52-week low than 52-week high. So on Friday, there were 499 stock made new 52-week low versus 65 stocks made new 52-week high. Also, in the cumulative advanced decline, we are still looking at this negative divergence between the Nasdaq cumulative AD line versus the Nasdaq 100. So we are expecting the Nasdaq 100 to eventually get below this low here. Looking at the 11th sector in the S&P 500, last week we saw that the real estate was the worst performer, followed by utility. Then the best performer is the communication and the technology, followed by the material. For the year to date, the communication and also technology are the strong performer, with the consumer discretionary also in the green, almost 10% gain. But the worst performer for the year to date is the energy, losing about 11%, followed by the financial. It lost almost 9.5%. And looking at the individual chart of the each one of these sectors, you see that the XLK, the technology, is quite strong, and it is outperforming the S&P 500 and holding above this 134.92 support level. And for the healthcare sector, the XLV is pretty much flat, so it's pretty much performing relative to the S&P 500, and it is holding above this 121.29. And the discretionary is also kind of flat recently, and basically it is performing relative to the S&P 500, although in the month of February it was kind of weak, but the beginning of the year was outperforming the S&P 500, and it is above the support level at 134.99 and 135 area. And here we see the financial is really taking a dive and underperformed the S&P 500, although it is still holding above this 30.14 support level here. But we'll see in the coming week to see will it break this support, and will the relative performance continue to underperform the S&P 500. And here we see the communication is outperforming the S&P 500 since the end of February, or in the month of March so far. And also beginning of the year, it was outperforming the S&P 500. Then in the month of February, kind of flat. Right now it's holding above this 52.36 level. And here looking at the industrial is underperformed the S&P 500 in the month of March. We see that since the October into the beginning of the year, the industrial was outperforming the S&P 500. Then in January, we see that it's kind of relatively flat and performing relative to the S&P 500. Right now, it's sort of broke down this 96.80, this 97 level, but it was able to close right near it on Friday. So we'll see, will it be able to get back above that level here, this level here next week, or will it continue to come down? And then the next level that we'll be watching will be somewhere around this 87.5. And for the consumer stable, you can see that it is sort of in a trending way. It is outperforming the S&P 500 on the trend, but also we noticed that the price action has pretty much been flat for the last month or so. And here we're looking at the energy been underperforming the S&P 500, and has broken below the 78.55 support level here. So we'll see, will it be able to get back above it or continue to come down? Then we'll be watching this $70 level here, the 69.80 area. And here the real estate also underperformed the S&P 500. The commercial real estate market could be the next area that we might see some sort of crisis. Pay attention to that and see is that going to materialize, and we might see a little bit of a financial crisis due to the commercial real estate blowing up. And also we noticed that the material is also underperformed the S&P 500. in the recent week, although last week it's a little bit flat, but you see that it is kind of chopping around between the 76.66 and 73.39 area here. So we'll keep an eye on it to see would it come down and test this 73.39. And here we see the utility. The utility got a little bounce last week here, and it is holding above this 62 area. So we'll see, because utility been also kind of flat in the last couple months in terms of relative performance to the S&P 500. Now let's take a look at the U.S. dollar. The U.S. dollar pulled back a little bit after a couple days after the FOMC announcement here, and now it pulled, getting a little bit of a bounce. So we'll see, would it be able to get back above this 103.80? If it could get above this, then we could see it possibly moving back up to this 105. But if it just a little bit of a oversold kind of bounce and come up here and get rejected at this 103.87, then we could see it come back down and watch this low here, this 102. If it dipped below this low, then we could see this 101.29, this 101.30 area get retested. And looking at the 10-year yield, we see the 10-year yield dip below this 3.4. Right now, it's trying to get back above this. So next week, we're going to see would it be able to get back above this 3.4 and possibly take back, this 3.6 area, or would it continue to move down to this 3.167? And on the 10 and 2 inversion, we see that it actually came up to this 0.266 area of the inversion, and on Friday, and then closed back down to this 0.399 or near this 0.4, this inversion. Now, it was as low as 1.08 before the FOMC announcement a couple of weeks ago. And looking at oil, we got a little bit of a bounce from the oil here off of this low, and right now it seems to be trying to make it back up above this 70 level. So we'll see, would it be able to get back up above this zone and possibly come back up to this 76 area, back testing this trend line here, and then we'll see, would it be able to get back up above this trend line. So watch this zone here around this 70 level to see would it be able to get back above. If not, then we could see another retest down here at this 84 level. And if it doesn't hold this low, then we could see it dip back down to this 60 area. And looking at silver, silver has continued to move up. It broke through this 2320 area, and right now it seems to be making its way up to this big balance area up at this 24 and a half area. So we'll see, would it be able to come up and test this composite point of control near this 24, or would it do a little bit of a pullback and come back down and double check this 2265 area, and looking at this basically the support level, this zone here, resistance turns support, and see would it get a bounce back up. So if it pull back to this 2265, this might be a good location to look for a little bit of a long entry if you miss out on coming up on this move here. So wait until it pulls back to this zone here and look for possible setup. Now, I'm not saying that it would be a buy zone. It could also dip down to this area here at 2184 as well, because that is also one zone that had encountered some resistance before it broke through. So these are the two zones to keep an eye on for the silver. And for gold, you see gold came up to this 2015 and pulled back, dipped back down below this 1950 and found support, and now it's making its way back up to this 2015 area. So watch this 2015 level to see what it get above this. If it does, then we'd be looking at a possible move up to this 2078 or 2080 area. Now, if it pulls back to this 1950, then look for potential long setup to see would it catch it back or bounce back up. So because this would be an area to keep an eye on for possible back testing for support here, this 1950 area. Now, if it breaks below this, then we'd be looking at the possibility of coming back down to this 1850 area. And just look at the VIX future. We see that the VIX came up to this 28 level, a week and a half or so, and then it dipped back down to this 22 area. Even though on Friday it got a little pop up at the 26 area and then it pulled back down and close near this 23.25. So right now we're still kind of looking at a VIX to chop around between this 21 and 27, 28 level until it could get above this 30 here. I don't think the market participant really be in a panic mode of running for cover. So we might even see it dip back down to this 20 area and possibly get back under this 18 level here, this 18, 19 level. But here's the zone to keep an eye on is this 27.99, 28 and 29 area to see would it be able to pop through here. Then we might see a little bit more fear coming into the marketplace. Here on the S&P 500 weekly chart here, we see that the S&P 500 also been chopping around inside of this zone here between 4,200 and 3,600 since the April timeframe of last year to the present. We're watching to see would it be able to break above the 4,200 or break below the 3,600. And for the S&P 500 daily chart here, we're looking at the upper range of between 40.65 and 40.57 for the week. And the lower range is somewhere around 38.84 and 38.55. We're looking at this trend line here to see would it be able to get above this trend line and get up to this zone at the 40.50 level and possibly move up to this upper range of the expected move. Now, if it is unable to get above this trend line here and move back down, then we'd be looking at this potential move into the lower range between 38.85 and 38.55 area and possibly come down to this 38.20 area, okay, and this low here. So keep an eye on this December low. Once again, if we dip below this December low here, then there's a good possibility you're going to retrace back down to this lower range of this balance area down here at 36.50. Then we could also be keeping an eye on the October low to possibly get tested. I'll be posting a separate video for the SPY, QQQ, and IWM in the next day or so. In this video, I will also discuss the gold ETF, so be sure to watch this video. And for the Nasdaq 100 on a weekly chart here for the candlestick, we also notice that been bouncing between the 13,000 and the 11,000 level. Right now, it is sitting right near the edge of this balance area. So we're going to see would it be able to break above and move away from this 13,000 area and possibly come up toward this 14,000, or will we see a little bit of a false breakout and come back in, or just come back down and retrace back to this range here and come down to this 11,000 level. And looking at the Nasdaq 100 on this daily chart here, here's the upper range for the expected move for the coming week. It will be between 13,140 and 13,095. Then the lower range will be between 12,438 and 12,310. So again, it's right now it's sitting up near this upper range of this balance area here. So we'll be watching to see would it be able to break above this range and move up toward this upper range of the expected move. If it does, then this gap fill here could be in play, and that would be up above this 13,200. Now, if price is unable to break away from this balance area, instead to get rejected and come back down, then we look for this lower range of the expected move to get tagged and keep a watch on this level here. If it breaks below this level, then there's a good possibility we see a retracement back down to this 11,000 area, this lower range of this balance area here. Then that will put the October low in play. And for the Russell 2000, we're looking at this 2,000 level and also this 1650 area. So we're looking for this, chop over here. Right now, it's sitting right near this 1735 area. So we're going to see would it break below this 1700 level here and move down to the lower edge of this balance area or this consolidation zone and see would it break below it and dip under the 1600 level. And the Russell 2000 last week, it took down below this December low, but it did pop back up and close above it on Friday. So once again, we're going to be keeping an eye on this December low here near this 1720. And if it stay close below that, then look for a move down to this 1640 here basically testing this October low for the Russell 2000. Now, if it is be able to continue to bounce, then look for this 1786 area as the next potential resistance to see what it be able to get to. If it doesn't, then look for a possible rejection back down. And that could be the next move down to take out the December low and close below it and move back toward the 1640 area. And for the Dow Jones Transportation, it is sitting right above this December low here. So right now it got back above this zone and sitting at 13,700 area. So we'll see would it come back down and take out this December low. If it does, then we'll be watching for a move down toward this 12,600 area. Then if it breaks below this level, then the October low will be in play here. Now for the upside, if it could stay above this 13,450 area, then look for a possible move up to this 14,133 and see what it encounter resistance, get another push back down. If it closed below this December low, then again we'll be watching for it to retrace back down to this lower edge of this balance area here. And if it breaks below this edge, then we're going to look for the October low to be in play. Right now for the Dow Jones Industrial, we're basically looking for the Dow Jones Industrial to come back down and retest its low here and work its way down to this 30,000 level here, in the lower edge of this balance area. And this is the December low here, and it dipped below this December low already, and it tried to get back above it up here on Wednesday of last week and was unable to close back above it. So right now it's coming back down. So once again, we are watching this low here. If it take out this low, then we'd be looking at this area. And for the New York Stock Exchange Composite, you see that it came down just like the Dow Jones Industrial, dipped below the December low, and unable to reclaim it and close back up. You see that it tried on Tuesday of last week, but then on Wednesday it just dipped back below it. So right now we're looking for a continuation move down to this 14,000 level to see would it be able to break out of this balance area and dip into testing this October low. So that's basically what we're looking for on the New York Stock Exchange Composite. So after a bit of wild swing from the latest FOMC announcement, the market sentiment remained to be fearful and risk-off. The market internals are still pointing to a market weakness. The large-cap tech stocks such as Apple, Nvidia, Meta, and Microsoft are holding the S&P 500 and the Nasdaq 100 up. But if we take a closer look at the Russell 2000 and the 11 sectors in the S&P 500, other than the technology, communication, and consumer discretionary, which is mostly Tesla, the other 8 sectors in the S&P 500 are all negative for the year to date, with energy and financial being the worst performer, losing 11% and 9% respectively. So do not be misguided by the recent increase in the Fed balance sheet. These increases are not new liquidity injection. It is not QE. It is just a replacement to all those bank reserves that are tied onto underwater low-yielding bonds. So be careful on chasing those tech stocks at this stage of the game. Once again, cash is a position. Thank you for watching.